Information Act and published by Bloomberg Markets Magazine in its upcoming January issue, the bailout was far bigger than the Federal Reserve let the public or even members of Congress know at the time.
This is the story of an economic poison, one that's more dangerous than any chemical, more widespread than any pandemic. Its name? BlackRock. The $10 trillion financial parasite has injected its toxic formula into every corner of the global economy, from your grocery bill to your retirement account. Like all good poisons, it works slowly, raising prices here, suppressing wages there, always transferring wealth upward while leaving the rest of us weaker. But unlike accidental contamination, this poisoning is deliberate. And today, we're going to trace exactly how this financial toxin works, and who's really benefiting from our collective sickness. Meet Aladdin, BlackRock's $20 trillion AI puppet master. This isn't some sci-fi fantasy. It's the real software controlling nearly 10% of the world's financial assets. When Aladdin says sell, pension funds dump stocks. When it whispers buy, markets surge. But here's the poison in the code. Aladdin prioritizes BlackRock's interests above all else. Remember the 2020 market crash? While small investors panicked, BlackRock made $110 billion in profits. How? Aladdin gave them a 12-hour head start. The SEC called it legal front-running. We call it rigged. Now they've weaponized this AI further. Through risk management services, BlackRock forces companies into brutal cost-cutting. Layoffs, wage suppression, quality reductions, all to juice short-term stock prices. The result? A gutted middle class. Record corporate debt. An economy balanced on a house of cards. And when it collapses, BlackRock gets bailed out. You get austerity. BlackRock's most dangerous poison? The ESG scam. Behind the woke slogans lies a financial extortion racket. Companies must obey BlackRock's sustainability dictates, or face capital starvation. But the dirty secrets? These ESG rules have nothing to do with the planet. ExxonMobil scores higher on BlackRock's ESG scale than Tesla. Why? Because ESG measures compliance, not impact. The real game? Forcing corporations to replace experienced boards with BlackRock-approved activists, outsource jobs to green suppliers, often BlackRock portfolio companies, divert profits to stock buybacks, increasing BlackRock's holdings. The victims? Energy workers in Texas, factory employees in Ohio, pensioners whose retirements are gambled on unproven ESG bets. Meanwhile, BlackRock collects fees on both sides, charging companies for ESG consultations and charging you for underperforming sustainable funds. This isn't stakeholder capitalism, it's a shakedown wearing a climate mask. Under the ESG banner, BlackRock disguises profit grabs as moral progress. Companies that resist are punished through divestment threats and media pressure. Those that comply? They bleed cash to meet arbitrary goals. Goals BlackRock sets, monitors, and profits from. It's not about saving the planet. It's about creating a system where compliance feeds their bottom line. And while real environmental solutions go ignored, working-class communities are gutted in the name of sustainability. This isn't about green energy. It's about green profits, squeezed from forced transitions, broken pensions, and outsourced jobs. The climate is just the cover. The hustle is all that matters. Your grandparents owned stocks. You own a BlackRock tracking number. Their index funds now control voting shares in 90% of S&P 500 companies, 80% of pharmaceutical giants, 70% of major banks. This creates a toxic paradox. BlackRock simultaneously owns competing companies like Coca-Cola and Pepsi, Pfizer and Moderna. The result? Artificial price hikes, no real competition, stagnation innovation. Worse, they've perverted corporate governance. When BlackRock votes its shares, It demands more stock buybacks, inflating their assets, fewer worker benefits, cutting costs, more mergers, creating monopolies. The data doesn't lie. Since index funds dominated, corporate investment in R&D dropped 25%. Wages stagnated for 90% of workers. But CEO pay? Up 400%. This isn't market deficiency, it's a wealth theft. In 2008, BlackRock went from Wall Street firm to shadow government. The Fed hired them to manage $7 trillion in bailout funds. Today, they effectively set monetary policy through the Fed's corporate bond buying program, run by BlackRock, ECB's pandemic relief funds, managed by BlackRock, Bank of England's quantitative easing, advised by BlackRock. This means the independent central banks deciding your mortgage rates, they take orders from BlackRock's Larry Fink. The poison spreads deeper. During COVID, BlackRock was paid to buy bonds, using money printed by the Fed, to prop up companies BlackRock already owned. The ultimate insider trade. When inflation exploded, BlackRock made billions betting against the dollar. Now they're engineering the next crisis. Their Great Reset plans call for digital currencies, trackable, taxable, carbon credit trading, another BlackRock market, stakeholder capitalism, where they allocate capital, not market. This isn't theory, it's happening. And unless stopped, you'll own nothing while being happy paying BlackRock's fees for the privilege. They've captured regulators, influenced politicians, and quietly rewritten financial rules to serve their agenda. Through backdoor deals and advisory roles, BlackRock has placed itself above consequences, profiting in every crisis they help cause. When banks fail, they gain. When currencies wobble, they profit. When wages fall, their stocks rise. This isn't capitalism. It's extraction disguised as innovation. Their goal isn't growth, it's control. Control over your money, your data, your future. With digital currencies, every purchase can be tracked. With ESG scoring, every business can be judged. With central bank partnerships, every market can be rigged. What used to be a free market is now a managed simulation, where BlackRock writes the rules and we're all forced to play. And if they succeed, dissent becomes a risk metric, independence becomes inefficiency, and ownership becomes a luxury only they can afford. This is the financial endgame, and they've already started the clock. The antidote starts with you. Move your money to local credit unions. Demand Congress to break up BlackRock's ETF monopoly, ban central bank outsourcing, criminalize ESG extortion. This isn't fear-mongering, it's a battle plan. Share it. Act on it. BlackRock's poison spreads slowly, but the cure moves at the speed of collective rage. The system will collapse. The real question is, who will take the blame? Let's make sure the right names are on the record. If you want to stay ahead and understand what's really happening with our money, subscribe now and join the fight.